Local trade ended firmer yesterday, while global markets were mixed as investors await new economic data this week for direction. Now, the market is trying to get a sense of how the companies are handling high inflation, a slowing U.S. economy, and fears about a recession. Let's speak now to Executive Director at Citadel Global, Bianca Botes, and she speaks to us now. Bianca, good morning to you. Let's start with the volatile rand this week. What factors are influencing trade as far as the currency is concerned?
Good morning to you and the viewers at home. There's currently a few things driving the rand performance, with the key contributors being the interest rate outlook in the US, coupled with global growth concerns, as you mentioned. While broad-based risk-off sentiment is negatively impacting on emerging market currencies, the rand is unfortunately facing additional headwinds brought on by intense load shedding, the recent grey listing, as well as ongoing local growth concerns. More recently as well, the decline in the leading business cycle indicator released this morning is also adding pressure to the rand. And yes, we are trading in volatile terrain, but it's fairly range bound, with the rand trading between 18 and 18.30 at the moment. Yeah,
let's talk commodities. Oil prices stable as investors weighed strong holiday travel in China that could boost or that could fuel demand against the prospect of a rising interest rates environment. Now, slowing economic growth, though, elsewhere may once again affect the trade as far as the commodities are concerned. Just give us the lay of the land there.
Yes, so when we talk about prices, especially in commodities, we often refer to supply and demand, and that is really the key here in oil prices as well. As you mentioned, the uptick in economic activity in China has boded well for oil prices, as well as the commitment from OPEC to cut supply has really supported the oil price from falling further. However, constraints on demand, when taken into account the global economic situation and the fact that global economics are actually slowing down, will add pressure to the oil price. So currently towing the line between supply and demand, making sure that there is sufficient supply firstly and not an oversupply for decreasing demand, but also some optimism coming through from the Chinese economy, hoping that that will actually spur further demand for oil going forward.
Let's talk about the Reserve Bank's leading business cycle indicator. The data there is out for the month of February. Help us assess where we are as far as what that data indicates.
Unfortunately, not a very positive picture over there. The leading indicator dipped 0.7% month on month, and this marks the third consecutive decline in this leading indicator. The indicator is based on a couple of data points for local production, such as local vehicle sales, business confidence, money supply, and other factors. And it basically gauges the outlook for the South African economy as we progress towards the end of the year. Currently, the outlook is rather dim. The decline in that leading business indicator shows that there's lack of confidence on the ground. There's not a lot of production and manufacturing taking place, but also speaks to a very constrained consumer. So unfortunately, that indicator is painting a rather dim outlook for the South African economy.
Let's conclude with what Stats SA is expected to publish on Wednesday, and that is the Producer Price Index for March. What can we expect from those numbers?
We are currently expecting for an 11.5% increase in producer prices year on year, with a monthly rise of 1.3%. This comes after the uptick in CPI that we saw earlier as well, and speaks to the struggle for the South African economy faces to contain price pressure, and the struggle that the SARB has in terms of actually countering inflation, with load shedding really adding fuel to the fire. Currently, the SARB is expected to impose another interest rate hike of 25 basis points in May to try and contain these price pressures we are feeling.
Bianca Botes, let me thank you very much for that conversation around the performance of the markets this morning. She is Executive Director at Citadel Global.